Hey everybody, it's me, the Einstein of Wall Street, from the balcony at the New York Stock Exchange. This is Trade Like Einstein for Money News Network. I'm here with my man, Jay Woods, Chief Market Strategist at
Freedom Capital Markets.
Freedom Capital Markets. Check it out. So, welcome, my friend. It's so good to have you.
Good to be with you.
So, Jay and I have known each other for decades. Former market maker, specialist from the floor of the New York Stock Exchange. Now, we were just speaking with a bunch of young, really spectacular young people who are here at the exchange for a boot camp. Basically interns who have really been noticed and recognized by some of the great 600 CEOs of listed companies here at the stock exchange about how our lives we've had to pivot, right, as our careers have changed here at the stock exchange. We both started at a time, me a little earlier than Jay, maybe 100 years earlier. But all that being said, that's going to happen, right? Life sort of throws different things at you, and whether it's technology or AI or whatever it is, you've got to pivot. You got to be able to wake up every morning, look and observe, see where the opportunities lie, and if things are not going in the right direction, you're going to have pebbles in your shoe and bumps in the road. Transcend those, hop over those. You're going to have obstacles that are going to really throw you for your turn. But you know what? At the end of the day, you are allowed to pivot. You are allowed to reevaluate the situation and move on. Don't stay in a situation that's not working for you too long. Find something you love to do, and that's my inspirational moment, conversation of the moment. Anyway, I just went off on that one.
Yeah.
Jay is here because, in my opinion, he's truly one of the brightest guys out there who's got the big picture. He's able to, like very few people out there, not like a lot of people you see on mainstream media. He has an incredible ability, and a big part of it is the fact that he's worked here. He's been a market maker, a specialist. He's been in the pits with me for decades, and he's got a whole nother, and then he pivoted and became a market strategist. And so to be able to have that ability to look at the markets in a big way, to look at the globe, the geopolitical stuff, and stocks per se, he knows what's going on in the nooks and crannies of stocks, gives him a completely new and amazing perspective on markets and stocks. Anyway, welcome.
Hey,
great to have you here.
Great to finally stand here and talk to you.
Exactly. Yeah. So we're here, obviously, in the greatest financial institution in the world, this iconic building and all. We're at the end of the first half of second quarter, first half, 2025. Yep. And I would say, probably one of the wildest roller coaster, volatile first halves of any year in history. And mainstream media is going to tell you it was the greatest of this and the worst of that and this. We've absolutely, probably in the last 6 months, seen everything that a market can do. We've seen the high highs, the low lows. We've seen crisis. We've seen wars. We've seen virtually everything. And we've seen in individual stocks, we've seen stocks do almost everything that's imaginable too. We've seen them trade on their 52-week low and their 52-week high. We've seen indexes go. We've seen bear markets go to bull markets over lunchtime. They used to take decades to happen. So that's why I think it's so exciting for me to have Jay with me to really kind of give your view on, to the best of your ability, what the first half of 2025 has looked like for you.
It's crazy. You mentioned all those things, wars, bull markets, bear markets. It happened in quarter two.
Exactly.
It's like a 3-month stretch. So yes, markets have been volatile, headlines have been volatile, but the one thing that has remained constant, despite the fears, the inflationary fears, the unemployment fears, we have not gotten there. And what is doing well? The markets. What's leading right now? Industrials, technology, sectors you want to see lead, financials. This is good leadership when you look at it from a stock market point of view. As we go into third quarter earnings, I think we're poised to continue this rally higher. We're only up a few percent for the year.
Right.
And I think the momentum is there because we've gotten that headline risk out of the way. We got that ridiculous Liberation Day chart where it was the end of the world and this is going to cause...
As Dan Ives called it, an economic Armageddon.
Yeah, it was going to cause an instant recession and inflation was going to get out of control.
Correct.
It hasn't happened. There's still that fear it could.
And it can.
But the market is telling us a different story. The market is shrugging it off. These companies, CEOs, the most important people in the world, those S&P 500 leaders, they're, giving tepid guidance. So the bar is set pretty low going into Q3 earnings, and I think we're going to exceed that bar. And then if we can get some clarity, we still don't have it. Maybe August 1st we get clarity.
Right. On the tariff question.
Exactly. We may see explosive growth because people are going to have to chase performance. And right now, when you look at a global picture, the U.S. is underperforming these global markets. We could catch up, and it'll be fun to see if we do.
So that's what I love about Jay. He's in every nook and cranny of the whole global picture. So let's think about it for a while. So rarely have we seen. I think the last time we had this happen was at COVID, when on November of year 2021, with COVID in the midst of all that darkness. Jamie Dimon came out in a news conference and earnings season at the last quarter of that year and said, I cannot give guidance. I do not have enough information. And if you think back to 2021, November 2021, we were in the middle of it. We were already in the next, I think it was Omicron. We were in the next, people were dying still in the streets. We were, every day we were seeing the millions of people clicking away. And, and that led to so much uncertainty in markets. And so that was the day that Jamie Dimon came out and he said, ladies and gentlemen, I can give you an idea of what earnings were going to be, and they were not good, but I can give you absolutely no clarity about guidance going further. Earnings are what happened last week, guidance is what happens next week. And we haven't seen that happen, the inability to give guidance until recently. So, what I'm calling the mini crash, which was the February 19th record high here in 2025 to that low of April 2nd to April 9th, which was literally down more than 20, I think 20.8%, I think was
Intraday,
the number,
yeah.
right? Mm-hmm. So that we saw the market go down. At that point, General Motors, Ford, United Airlines, some of the banks were unable to give guidance at all. They did have earnings, and the earnings were solid. And I think that's what's going to probably carry us and has carried us to where we are today. Even with all this uncertainty, we are still trading at record highs. But we did go through a patch. And I want to ask you, when we were in that patch, when we were in the dark period of April. I mean, let's think back. Because I know when we were in the middle of it, I kept saying, are we going to look back at this time as a time we should have sold because things are going to get a lot worse? Or are we going to look back and see this is one of those times that the market sold off hard and it was just another buying opportunity? In retrospect, that's what it was. Yeah. However, when you were in it, what were you thinking?
Hindsight is always 20/20.
Yes,
but I think that's where our experience down here, living through the financial crisis, which was a much longer time, and it was a crisis where we saw a lot of our friends lose their jobs. So this place changed.
Walking out and carrying boxes.
Yeah, it was horrible, and we somehow survived, adapted to that, living through COVID, thinking we could die. People don't realize how severe that was. Correct. And then when you hear the headlines, when you hear Jamie Dimon, a storm is coming, Bill Ackman during the peak of COVID saying hell is coming on national TV, causing
driving the market into a circuit breaker. Remember that?
Without a doubt. It was the only midday circuit breaker we had during that time. We had 4. That was one of the 4. The last one, as a matter of fact, before we bottomed 3 days later. That was a Wednesday. We bottomed on a Monday. Why do I remember this? I don't know.
Because you have a photographic memory like I do.
Yeah, but when you hear those headlines and you get that pit in your stomach and you think the world's coming to an end, that's why, as a market maker, that's the time to buy. Buy when there's blood in the streets. A horrible expression, but when you are in the worst of the storm, that's when you have to take the other side of that trade. What happened in that quarter 2? Market sentiment got to its worst level, not just this year, not since COVID, of all time.
Really? It was
People were that fearful. Wow. The sentiment hit historic lows. And I remember saying at the time, this is the time you have to buy. You have to be a contrarian because those are opportunities and you don't get them very often. Right. But when they are handed to you, it doesn't feel right. In fact, there's this old expression. This is the only market in the world where things go on sale and people rush for the exits. We're stuck in the building, so we're as a market maker, I had to buy. And more often than not, if you have the time frame and the wherewithal to withstand the downdraft, you're going to benefit.
Because you may not pick the bottom.
No, you're never going to pick the bottom.
You're never going to pick the exact bottom, but you've got. Go ahead.
Yeah, picking the bottom is it's a fool's game, and trying to catch that falling knife in individual stocks. So that's when you buy a basket of technology stocks, because maybe one does get beat up, maybe one cybersecurity stock blows up. You don't know, but if you have a basket of it, you have more of a chance to do well. And then when you're getting into a trade, you don't throw everything into one trade. You cost average in. All right, I have $1,000 spent. I'll buy 300 here. Okay, if it goes low, lower, I have a little more ammunition. Then I'll cost average. When you start talking in terms of betting, oh, I'll double down here, I'll double down there. I've seen too many people with that gambler's mentality blow up, and you always have to manage that risk. If it goes a little lower, then I'm going to get out. I'll try to get back in another time. Right. And that's what the successful traders, the successful market makers did. They took a lot of little losses and didn't throw everything into one trade, hoping that it would work out. Over time, it should, but when it gets that bad, that's when you step into it.
So you actually, when we were in the midst of that, because I've had a bunch of mea culpas since April, because at the time I was not, look, when I'm in a situation like that in life and in my job, when I'm not able to, and my life is sort of, I'm powerless over the powers that be around me, like at the time, the president, I was not able to put myself in his mind to know what is his next move. Because, no disrespect, and this is not a political commentary, but that was a self-inflicted, right, economic Armageddon, right? We know that. It was the manner, look, now we know that Mr. Trump has his tactics and all that kind of stuff, but at the end of the day, and I've spoke about it with Richard Quest on CNN, with you, with a lot of people, and Dan Ives. At the end of the day, that's 11 weeks from the high of February 19th to the low of April 9th. The fact that the way the information was disseminated was the reason that the market sold off the way it did, right? Markets can handle anything except uncertainty and surprises, and that was all about the policy. The policy around the way he handled the tariffs was all about uncertainty and fear. And so when we were in the middle of it, see, you were able to tap into that. I was never a market maker. So while I do take on that I do wear the broker hat when things are, when all, that great line from Caddyshack, when he's out on the golf course and Rodney Dangerfield picks up his phone that's actually a golf bag, and he goes, but there's sell. Well, everyone's selling, then buy, right? It's a great thing, and then he pours some beer, right? But anyway, all that being said, you needed to put on your market maker hat around those 3 weeks there when I was not clear, and I'm saying this honestly, and I talked about it with Dan. We were looking at it. We were on CNN. It was like Armageddon. It really looked bad. It was what did we call it? Self-imposed. God, I can't remember what we sabotage. It was just like self-sabotage of a market that didn't have to happen. If we had come in, look, he's the new sheriff in town. If he had come in and said, you know what? Tariffs are my thing. I have a plan. This is what's happening. We may have some bumps in the road. It may be more pain before we get there, but this is what I plan on doing. The market would have handled it. We've lived through wars. We've lived through financial disaster. We've lived through health crises. We've lived through it all. However, this felt a little different from me because it was self-inflicted. However, I'm sort of upset with myself that while we were in it, right, I was not able, I really was looking at the dark side. Not that I took positions, not that I did anything like that, because that's not what I do. But at the end of the day, that was the time. When people are sitting here now, and a lot of my audience are people who are retail traders, and the retail traders, and I think we mentioned this when we spoke last, the retail traders have matured incredibly well from the days of COVID. Think about it. Before COVID, you had to be an accredited investor to be trading the market. After COVID, with Webull and Robert and all that, everyone with an iPhone and $100 could trade the market, right? So what an amazing thing. But then they got smacked in the face a bunch of times because they started buying GameStop at $487 and Rivian at $111 and AMC at whatever. And they lost a lot of money and they got smacked around like a seagull in a hurricane, and they went home to lick their wounds. However, they came back, right? And they came back in a strong level of force. And what we saw this time, which is important for everyone to note, if you're a retail trader out there, kudos to you, because in the midst of April, it was the margin calls, it was the mutual funds, it was institutions that were selling at the lows and not the retailers. And then the days that came up after that, we had that Monday where the market was down big and we had a complete intraday reversal of $4.1 billion came into the market on the buy side, and it was all retail. So kudos to the retailers that have learned a lesson. They've learned how to navigate fear and risk, and they've gotten into the market. So you know what?
The retail investor is a lot smarter than the retail investor we used to mock for always being wrong on these trades. And this is a time where they're using the tools given to them. Okay, they got into the market, but once they came here, they didn't leave, and they studied it, and then they learned from their mistakes. So to me, that was a real tell. And now why I'm so bullish is the institutions have been on the sidelines and they're going to have to chase performance.
They're playing catch up.
And that's
Big
when the
time.
retail should start selling stock and taking profits.
Yeah.
Please take profits. It's, let that be the worst trade you ever make.
No one ever got broke taking a profit.
I know. And when this trade happened, yeah, you get the pit in your stomach. And now I can trade a little more aggressively because I don't have the strict rules that I did when I was a market maker. And I bought SPY on the way down and I didn't catch the bottom.
Right.
But I sold it too soon on the way back up because I didn't suspect we would get such a V-shaped recovery like we did in COVID. 2 different times, but pattern-wise, exactly the same. And I follow the price action and the patterns, and the fact that we've already made that full V and now we're breaking out to new highs with the leadership in place, it's very exciting to see what we can do over the second half, despite the headlines and some of those self-inflicted wounds. We're shaking off implementations of tariffs again because people feel like this is just a negotiating tactic. We'll get through it. Right. Now, if we get that worst case scenario, we know the market will sell off. I don't think the market is calling the president out and they're saying, no, I think we'll be okay right now.
So let's go. One thing I did say when we were in the midst of it, even though I was really more fearful than I should have been, is that the only silver lining about a market that sells off 20+% in 11 weeks, right, is the fact that it can rebound just as quickly. And what was unheard of was that we rebounded in half the time it took to go down, we made it back. Maybe it had something to do with the president telling everyone to buy the market, but all that being said, it's a good thing. So where are we now? Okay, so for a while, our attention, so we sold off hard, we rallied back, beautiful V-shaped recovery on all that. Retail's in a good place. The market, right, if we had been standing here, where we are as far as the geopolitical stuff and the tariff story, right, and all that's been going on, and the wars and all the uncertainty over the last couple of weeks, post the sell-off, post the rebound, and we had been down 1,000 points, I think it would be a little easier for us to explain why we're down 1,000 than we are to say, with all that uncertainty, we are still trading at record highs.
Yeah.
Right? Because it's a little bit of a quandary. Like, why are we? And so we just sort of, you talked about it a little bit, that earnings were good all along the way, even though we couldn't deal with guidance. Mm-hmm. That retail was there buying stock, and that now institutions are having to play catch up. So was a lot of cash on the sidelines that is now supporting. It's the backwind of the market that's trading this way. Yep. Also, markets are forward-looking, right? And at the end of the day, we can't imagine that it's going to be as bad as they said it was, and I agree. Even in retrospect, whether the taco trade, though, I'm not a fan of that thing, but at the end of the day, the president threw out a big swath of 185%, 140, 70, 60, 50.
Big chart.
It's like there's an old joke about, like, you go up to your dad and say, Dad, can I borrow $80? And he goes, $60, you need $40, here's $20.
Yeah.
It's like, okay, we're going to have a 185% tariff. And at the end of the day, talking to Dan Ives the other day, he says, best case scenario, we're going to have a bottom line of 10%.
Yep.
Besson says the same thing in a worst case scenario of 15. Mm-hmm. If that's the case, and we got our attention got diverted a little bit by the wars, and no disrespect, because I know there was a lot of pain and suffering along the way in the Middle East. Yep. Okay, all due respect there. But at the end of the day, we are now refocusing on the tariff story, because at the end of the day, this is all economics. It's not, historically, politics has not played a big role in markets. And at the end of the day, it's at the end of our lifeblood, our earnings, our guidance, and price action and all that kind of stuff. So where are we now? Where are we now is a fascinating place. Is Mr. Trump going to come out of the gate I think he's learned a lot too.
I think so.
Right? And I think he's matured in how he handles things. And I think that the world has matured. I thought one of the most significant things, and something for everyone to take notice, was the EU, the president of the EU. So a lot of people, a lot of countries around the world and leaders that were bullied by Mr. Trump, and he threw out a number and they didn't like it, and then they were not talking to each other, and everyone grabbed their ball and left the playground. Okay. The president of the EU, when she was confronted by a tariff situation, she said, Mr. President, I'm here to make a deal, but I need a little time. He said, thank you, I respect the way you approached me. I'll give you 60 days or 30 days and come back to me and we're going to make a deal. That was the first world leader who came back and dealt with him on his grounds, on his turf. Mm-hmm. And we saw that that can happen. And that helped him to mature. It helped her to get a deal, because I think any day now, while we felt that July 7th and July 9th were going to be days of looming darkness around tariffs, I don't think they're looming anymore. I think while we were thinking about war, a lot of backdoor diplomacy was going on. Do you believe that?
Without a doubt. And that time is what saved this market from going into that deeper spiral. And that time now, if you negotiate in good faith, this could work out. It could work out well, but I believe 10% across the board is what people anticipate, maybe 15%. Scott Bessent has been the calm voice in the room, and he's been the person
He's been the adult.
He's been the adult in the room, and he's been the one that the market is really listening to. Right. And then the next part of the story is the Fed. Will the Fed cut rates? Will this help ease some of the congestion we're seeing in the housing market? Will mortgage rates come down? Right now, the data is kind of saying we're in a good place where there's no landing. We're just kind of flying the plane steady. Let's see what data comes out. If inflation does not go up as everyone anticipated it would, which is kind of, that's the head scratching thing. Inflation didn't go up and we did raise tariff. Then there's no reason for the Fed not to cut once but twice over the coming, September through December meetings. So that will be the story we watch. Earnings season, the Fed, and then tariffs. Those are the three things.
You've laid that out beautifully, because at the end of the day, we know that the decision by the Fed, look, the relationship between the Fed and the president, there's a Chinese wall there. There's not supposed to be any kind of interaction, even though Mr. Trump tends to, travel over the edge a little bit on that one. But all that being said, at the end of the day, we hear it every Wednesday, every 6 Wednesdays when Jay Pow comes out there and he talks about what he's going to talk about. He says that his decision is economic data-based decision. Yeah. And that's what it should be. And so where are we now? So we got, you laid it out. Yeah. Are we going to have 1 or 2 cuts, and are we in a position to be able to absorb those cuts? Yep. Do we think about it? And I love going back to this, because at the end of 2024, just to put a little historic perspective here, 2024 was one of the great years of all time. We were up 25.3%, I believe, or 23.8. I may be dyslexic there. But anyway, at the end of the year, after 218 trading days in 24, 58 of those were record highs. Yep. Imagine that. But at the end of the year, in the last Fed meeting, we were looking, the guidance for 2025 and 2026 were already 4 cuts each year. But things were going so well in markets and the economy that Jay Powell decided before the year ended, he was going to cut guidance from 4 to 2 in both those years. Yep. The market didn't like it. We sold off aggressively a couple thousand points. But he did it because he did not feel that we should expend a bullet from the gun unless we have it, because we have limited bullets. Mm-hmm. I know we print money and blah, 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 and all that. But at the end of the day, in the real world, we only have a certain number of bullets. And so what I think is important what you said is that we don't need to jump into a cut unless we need it. Yep. We may need it. Like, obviously, a lot of the fears were that while this looming, unbelievably large number in tariffs, which took our market from being a high growth market to a low or slow growth market, the fear of cutting rates, while that was happening, even though Mr. Trump wanted to, Jay Powell said no, because of the fear of stagflation. Mm-hmm. I didn't even know what stagflation was, right? But it's high inflation with
no job growth, or high unemployment.
Exactly. Mm-hmm. So right now, and I'm so glad you laid it out, because that's how we can wrap this all up, is what we just described to you in wonderful detail what the first half of 2025 was all about. Now we are in the first coming days of the second half of 2025. I think the market price action is really constructive. Yesterday the market was down, but we were 3.5 to 1 advances versus declines. That's nice price action. Yep. We're seeing, yesterday, if you look at the market, we were hovering around even money with some buy side, with some sell side, but that's fascinating when you see that. We've been here for a long time. People, you'll see mainstream media too, even in people who are in finance, will throw out stuff out there because they're reading in sort of a non-mature fashion, where they're reading price action. We know about price action. And sometimes you may see a down market, or you may see, the Dow down and the S&P up, or all that kind of stuff. And people may just throw out sort of, whimsical explanations of what that's about. But I love Tim Anderson for that reason, because he always looks into down to the nooks and crannies of what happens in a day, and he picks out these little bits of data that really are so illuminating about, like, why does the market so positive?
Yeah.
We know he loves the guy who's in office, and that's all fine and good, and he sees everything with Trump-colored glasses, and that's always good too. But it's fascinating for me to see how everybody sees things the way they are. Things in anybody's glasses right now look really good.
Yeah, and I'll give you a little nugget, because
Go.
Tim gives you nuggets. I'll give you to start off the first week of the third quarter.
Yes.
The 25 worst performing stocks in the S&P 500.
Okay.
24 of them were up the first week. People are rotationing. They're looking for They're looking for losers where there's opportunity. You see stocks like Starbucks and Nike that have been beaten down start to come back. The home builders stop going down. They're coming back. So rotation is the lifeblood of a bull market. We're seeing it here. And then the fun fact: the one stock that did not go up, United Healthcare, still getting beaten down. Yeah, so I saw it down 7 as we were taping this.
Okay. Well, that's what's been dragging on the Dow, right?
Yeah,
biggest percentage in the Dow.
It was, and now it's Goldman Sachs, and they report earnings early next week, so it's going to be fun to see if they can get the Dow back above 45,000. I'm sure you have a hat for that.
Yes, we do. We have hats for that. And look, one thing I'll also say is, Dan, I've said, we're in the midst of an industrial AI revolution. We're in the second inning of a game that's going extra innings when it comes to CapEx and all the money behind that. That is going to take the market higher. He believes that there's a 7 in front of the S&P by year end. All due respect, I actually agree with him. But you just said that, rotation. Now that's what comes from experience in markets, is looking at how a market is trading and knowing that the first week, exactly, and I said it yesterday on my end of the day wrap up, is we are seeing rotation. We're seeing, and I love that you gave me. That is a real nugget. So people are getting out of there, whether they're higher performers or underperformers, and they're moving things around and positioning themselves and posturing themselves for the third quarter and the fourth quarter, but in a positive way. It's not majorly defensive.
No.
It's really positive.
Money's not leaving the market. It's just
not
rotating
at all. Exactly.
And that's a positive.
So you know what? We just laid out a scenario to you where the market, and look, is the market going to go up or down? Yes. Okay? That's the best thing we can say. Neil Cavuto used to ask me that in the beginning of every interview, and I would always say yes. And that's what is going to happen. However, you now have a little more of what's going on in the nooks and crannies to explain to you why we are where we are and what it looks like, what it was like, what it's like now, and what it looks like in the future. And that's the best thing. We got a super solid market. You are the man.
All right.
And I love it. That's all I got to say about that. Trade like Einstein, Money News Network. I love you.